Impeachment. Ouch. This is the Silver Reports Weekly Review, where we take a look at a few of the headlines that moved the markets during the week. On Monday, the Dow closed up 100 points, the S&P closed up 22 points, and the Nasdaq closed up 79 points. The markets were bullish on Monday as more details of the Phase 1 trade deal were released. In the trade deal, the U.S. agreed to reduce tariffs on $120 billion worth of Chinese imports. The tariffs are set to drop from 15% to 7.5%. But the big news on Monday was the news of Boeing halting production on the 737 MAX. A quick recap of the situation: Lion Air Flight 610, a Boeing 737 MAX plane, crashed on October 29, 2018. 5 months later, Ethiopian Airlines Flight 302, another Boeing 737 plane, crashed on March 10, 2019. After the second crash, aviation authorities around the world grounded the planes. Since then, Boeing has been attempting to find a fix for the 737 MAX issues. More than a year after the first crash, there's been no fix. However, Boeing continued to produce the planes at a rate of 40 planes per month, even though they weren't allowed to fly commercially. The Wall Street Journal estimates that there are over 600 737 MAX planes parked around the world. Boeing had 4,900 orders for the 737 MAX, but have only delivered 387. Since the first incident, the stock is down 6.5%, which isn't bad considering the year Boeing has had. But after the news that the company will halt production, there's no telling how far the stock will fall. The good news for Boeing investors is that the company isn't a one-trick pony. Some of the companies that ordered the 737 MAX have switched their orders to other planes in the Boeing catalog, so there's that. 2020 is going to be an interesting year for Boeing. On Tuesday, the markets kept moving up. The Dow closed up 31 points, the S&P closed up a point, and the Nasdaq closed up 9 points. The markets were able to overcome the news from Boeing on Monday. FedEx, however, provided plenty to worry about. FedEx reported an EPS miss of 27 cents and a revenue miss by $390 million. The company issued guidance for earnings between $10.25 and $11.50 per share, which was lower than the company's previous guidance of $11 to $13 a share. The company lowered guidance in September due to trade tensions and macro global economic concerns. Now with the Trade 1 phase deal in place, FedEx now has to deal with losing the business of Amazon, who has decided to stop their third-party sellers from using FedEx. With Amazon in the delivery logistics business, it's going to be a tough road ahead for FedEx. On Wednesday, the Dow closed down 27 points, the S&P closed down a point, and the Nasdaq closed up 4 points. The market seemed to be concerned about the impending impeachment by the House of Representatives of President Trump. In other news, Tesla's stock hit a record high during the day. The stock closed trading at $393.58 per share on Wednesday. The stock is up over 54% since its surprise third quarter profit. The stock appears to be on its way to the $420 per share mark, which was the price of the infamous funding secured tweet. Tesla is close to hitting that mark and allowing the investors to share in the wealth. I've been critical of Elon Musk in the past, but he deserves credit here. Less time on Twitter in 2019, more focus on the task at hand has produced stellar results for shareholders of Tesla. Many analysts, me included, expected 2019 to be the year of mass EVs hitting the US market, but there really haven't been too many in the Model 3 class, semi-affordable that don't look like a golf cart. Big win for Tesla. Congratulations to Elon Musk and the Tesla investors. Also on Wednesday, Netflix got a boost from Bank of America's survey on streaming video services. The survey indicated that a number of people with the intention to cancel Netflix dropped from 5% to 4%, suggesting limited impact by Disney+. Analyst Nat Schindler reiterated his buy rating on Netflix with a $426 per share target. The survey confirmed my original feelings on the streaming wars, that people will check Disney Plus out, but people will not leave Netflix for Disney Plus en masse. Disney holds a lot of nostalgia, but when the grown-ups want to watch something grown up, there isn't much on Disney Plus. Also, Netflix has good content. Analysts who have predicted the demise of Netflix have looked past the content. Netflix has taken the approach of throwing spaghetti at the wall, and while all of it hasn't stuck, some good pieces have. Orange is the New Black, House of Cards, Black Mirror, The Ozarks, on and on and on. I expect Netflix stock to hit another bump as the markets digest the hard numbers after a quarter or two of competing with Disney+, but I expect Netflix to be fine and continue to grow over the next 3 to 5 years. A few notable earnings from Wednesday. On Thursday, the markets went back to making record highs. The Dow closed up 137 points, the S&P 500 closed up 14 points, and the Nasdaq closed up 59 points. The markets weren't bothered by President Trump's impeachment, and investors continued to buy at the highs. While the markets did continue to move up on Thursday with the news of the impeachment, it'll be interesting to see how investors react as the process moves forward. The British pound fell on Thursday in conjunction with Queen Elizabeth laying out Prime Minister Boris Johnson's plans for the future. The focus was on a Brexit deal by January 31st and to re-establish trade agreements with the EU. The speech also touched on tougher sentencing for serious terrorist offenders and a funding increase for the National Health Services by 2023 to 2024. Nike made headlines after the market closed on Thursday. The company reported an EPS beat by 12 cents and a revenue beat by $240 million. The company exceeded EPS and revenue expectations and revealed growth in America and Greater China. However, the stock sold off in after-hours trading due to a miss on gross margin. The company reported a gross margin of 44% versus the 44.1% that was expected. The company saw an increase in average selling price and margin expansion in Nike Direct and Converse. The stock hit an all-time high earlier in the day but fell below $100 per share following the earnings release. I'm never a fan of buying stocks at their high, but there are few companies trading like Nike. The company, which has been around for almost 50 years, is still as relevant today as it's ever been. The company isn't just surviving, it's thriving still. A walk past anywhere where kids and young adults gather and you'll find Nike on the majority of their feet. Kids who've never seen Michael Jordan play basketball covet his sneakers. In collaboration with artists and fashion designers have made the Nike brand bigger than just athletic apparel. I don't think the sell-off of Nike stock is a major sell-off driven by concerned investors, but more of a play to entice smaller investors to sell their stock to bigger players so that they can acquire it at a cheaper price. Here are some notable earnings for Thursday. On Friday, markets continued to climb and markets set intraday highs again. The Dow closed up 78 points, the S&P closed up 15 points, and the Nasdaq closed up 37 points. Investors were bullish on the news of strong consumer spending in November. The Dow, S&P, and Nasdaq all closed up on the week. Comcast provided pricing structure for their Peacock streaming service. The streaming service will offer a free advertising-supported version, a limited ad version for $5, and an ad-free version for $10 a month. In crypto news, Ripple was valued at $10 billion after a fresh round of funding that raised $200 million for the company. In pricing, Bitcoin dipped below $7,000 this week, but was able to climb back above the level. Bitcoin was trading at $7,181 to close out our week. Ethereum was trading at $127.95. Litecoin was trading at $40.21, and Ripple was trading at 19 cents, down from last week despite the cash raise. Crude oil closed out the week at $60.36 per barrel, up from last week. A big winner for the week was Rite Aid, which increased 85% on the week following a surprising Q3 earnings release. A big loser for the week was Wave Life Sciences, WVE. The stock dropped 59% on the week after pulling the plug on the development of a drug targeting muscular dystrophy. If you're ready to get serious about investing and creating wealth, check out our latest quarterly newsletter, The Silver Report. Serious investment ideas are presented in a way that new and experienced investors can understand. If you're ready to master the markets, check out our newsletter at civilreport.com. Also, a link to sign up to our weekend article in focus is in the description below, and any headlines you want to read more about, the link to the full story is also in the description below. Thanks again for checking out the Silver Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section, like and subscribe, and may your next investment be your best investment. See you next week.